CPI, CPI, CPI. That's all really that's going to matter today, right? I mean, we can look at some headlines. We're going to look left and right, but we all know the blinders are on. Everyone's watching CPI. Are we going to come in hot, light? Is Jerome Powell going to be Santa Claus Powell, or is he going to be dumping Powell? Let's find out. Pre-market prep, rise and shine. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. Let's get it started. Let's take a look into the markets. We're going to bring on Dennis Dick, and I got something up my sleeve for you today. Normally, we'll run through the futures, but I said, you know what? We need something special on a day like today. It's CPI day. You know what? We need a special guest. We need a calming voice through all the madness in the market. And I thought, what none other than common voice than Anne-Marie Baiynd. So give us a good welcoming chat. Give us a thumbs up. Get us started the right way. And let's bring on Anne-Marie Baiynd. How are we doing today,
Special
Anne?
guest host.
Hey guys, glad to be here. I've missed you guys. It's good to see you.
We missed you too. I do need Anne-Marie's calming voice because I'm always hyper on this day. Obviously nerves, butterflies ahead of the 8:30 number. But Anne-Marie's going to stay with us and calm us through these reports so we can calmly trade these crazy numbers.
The voice of reason. The chat knows it best. There you go. We sometimes need it, especially on a morning like today.
We need it all the time.
We got a lot to talk about. We'll definitely take a look. Overnight action has us slightly up. We're up on the S&P SPY at 401.47 right now. And, I mean, this is just going to be all really dependent on what happens today, CPI. Yesterday at around 3 p.m., we started really getting a nice little push up. Really from around 12, we just started trending towards the upside. What did you see maybe in some overnight action? Anything out there, Dennis?
Chop. We're just seeing chop, and we're seeing chop ahead of it too. Oil continues to, not oil itself, but the oil stocks continue to show strength. They were showing some strength yesterday. That strength does continue here this morning, obviously with the USO trading a little bit higher, but again, it's the oil stocks that are trading higher. There's been this separation lately between the oil and the oil stocks, but really, everything is going to change here in 16 minutes or 26 minutes. So it's hard to just come in here and say, wow, we're liking this or we're not liking this. I'm like right now, I'm just waiting till 8:30 number to get my bearings here. Anne-Marie, what are you looking at?
I feel the same way. The market feels so jittery. I feel traders are just at the ready to hit the exit doors at any time or bust in the doors because they don't want to miss the party.
Yeah.
So I've been sitting on my hands a lot, being very selective in my trading.
It's difficult. It's difficult, especially in a time like this when we do get moves like we did yesterday. It seemed like, at least from 3 p.m., it was a big push up. And I've been seeing a lot of this kind of pattern lately where it's later in the day trades towards 3 p.m., towards 4. We get this nice little move. And that's why even myself as a day trader, majority of the times I'm, out of the market by, let's say midday. But even I'm starting to notice that maybe that power hour is starting to get a little bit interesting. I'm going to start focusing a little bit more and seeing what kind of action we're seeing later in the day. Dennis, do you ever kind of take a look at that hour from 3 to 4?
Yeah, well, my hours of trading. I don't trade in the middle of the day. So that's when I'm coming back is 3 o'clock because middle of the day is chop hour. I'm an efficiency trader. The markets are very efficient in the middle of the day. I'm also a news trader. You don't have a lot of news typically coming out unless it's a Fed day. You don't have a lot of news at 1 o'clock in the middle of the day. So a lot of high frequency traders just chopping around there. So I take those hours off middle of the day. 11 to 2, I haven't traded those hours for years other than on the Fed days, which I would come in because there's going to be some significant new information coming into the market. So yeah, the 3 to 4, there's, a lot of money to be made, especially I'm focused on, my focus is the open and the close. So you do get these, obviously imbalances coming in that push stocks around, lots of different information there. But I mean, 3 to 4, there's some good opportunities at the open, at the close. I just feel like midday, it's always kind of a little bit more challenging. Anne-Marie, where do you focus your trading? What hours?
Sorry.
No problem.
No worries.
I got so excited to answer Dennis. I just pulled out my earbud.
I had that happen to me when I got on CNBC about 12 years ago, and I had my earpiece fall out on the floor, and I couldn't hear the question. I look up, and I just look like a deer caught in the headlights, and I'm like, this is gibberish. And I never really got invited back after that.
They never brought him
That was
back.
the end.
They never brought him back.
They never gave me a second chance. So
we're
going to invite you back. We'll forgive you on the earpiece.
Yeah,
it's not your fault.
thanks.
That happens.
I appreciate it. I've been focusing a lot on how gamma flow is being affected only with watching where the puts and calls for 0 DTEs are moving. So with SPY, we're seeing so much more volume in the calls and the puts, really 3 strikes at the money and 2 out of the money, sometimes 3 out of the money in SPY on the put side and the call side, and they start filling up. And when they get to a space where the put call is about, any more than 1.2, 1.3, I know we're going to have a drive up into the close because everybody's going to end up covering. And so it's been a really great look on the chains. If you can start staring them down and seeing where they fill in, you get a lot of info. And so for the afternoon pushes, that's really what I've been watching.
Love that. And definitely using more of a non-discretionary outlook there and specific numbers to look for. That's always great to have that. And definitely we'll get into some trading action. Let's take a look at what's going out in the market. Of course, I know Anne-Marie banned for the Moneyball approach, but we won't get into that. That's for boot camps. You guys got to catch that. All right, let's get into today. Of course, the first news that was out overnight that it seemed like everyone wanted to talk about on Twitter was the FTX founder, Sam, finally arrested in the Bahamas. So, of course, there's not too much to talk about that situation. The only thing that I would bring up about that situation is Baiynd said on Tuesday that it's pausing its withdrawals of stablecoin USDC while it carries out a token swap. They did state that, of course, that this wasn't, because of any kind of liquidity issues. But of course, I think that whenever you're hearing mentions of any type of withdrawals being held right now, it just shows me the uncertainty in cryptocurrency and how investors are more than willing to take that money out of platforms right now. So if there's one thing that this catalyst is telling me, the withdrawals are still happening. Investors are still uncertain.
It spooks everyone when you can't take your money out or you can't get your money out. But I mean, this was inevitable, wasn't it? That he was going to get arrested. I mean, is this shocking to anyone here? I mean, with everything that's happened and all the money that's been lost, there was no way he wasn't getting arrested. If you think you had a bad month, this guy went from a wealth of $16 billion to, he says, 100 grand. To now being arrested. I mean, talk about going from the top of the mountain to, the valley, the deepest valley ever. Yeah. So it's been a tough month for SBF, but obviously it sounds like it's deserved. Anne-Marie, what are your thoughts on this whole crypto, SBF saga here? And then we'll move on.
Well, the short thing is I was really hoping for officials to do something that would restore some faith.
Yeah.
I think the common individual that isn't sitting in the power towers, as it were, we sit back a lot and we go, wow, that another one skates through without any recrimination whatsoever. And so I was hoping for that to happen. And, here's the thing, I'm not a fan of the crypto environment, but if they just actually followed rules, he's not in trouble because crypto's bad. He's in trouble because he stole funds of his customers. And
Mhm.
of course, that filters in, but it filters in because we really don't have real process controls in a lot of places, and people just are way into the cult of personality, right? Let's talk to this guy about doing $1 billion deal while he plays a video game.
Yeah.
Ooh, that's cool. That's amazing. That's whatever. We're all getting sucked into these cults of personality. And so I'm happy to see it happen. I think there are benefits to blockchain. Maybe this is a good thing that settles everything out, but my Twitter handle, then my name says I won't DM you for crypto. So, I'm not in the space, but that's really it. I'm watching it. At the end of the day, the fact that Blackstone, excuse me,
Blackstone.
Blackstone stopped their redemptions is far more troubling and with far greater reach than anything that might have happened in the crypto space, right? Because this is a multi-trillion-dollar environment.
I mean, nobody's talking about it either, that we, held off redemptions, and, Kramer tried to come on Mad Money. I don't know if, somebody was wanting him to run that segment, but trying to basically just calm everybody down and say, this is just normal course here, where sometimes when the redemptions get too heavy, they have to delay them for a quarter. I've never heard of that, Anne-Marie. I mean, Kramer tried to pass this off that this was normal. I was like, this does not sound normal to me. This sounds like there's a potential issue here. So scary from my perspective, that is, concerning to me. It makes, you wouldn't want to see a run on some of these other products, where investors all of a sudden realize, hey, maybe these things that, are supposed to be really liquid aren't as liquid, in a sudden demand and liquidity crunch as they claim to be. So I hope there's not going to be more issues like that with, obviously maybe it's just isolated, to Blackstone here, but it makes me skeptical that some of these illiquid investments, if somebody wants liquidity fast, it's not that easy.
Yeah, exactly. Private equity is great until it's not. And as far as the redemptions go, I was in a private equity group with Carlyle for several years into the financial crisis, and they had the same problems, but they told you when you scratched on the dotted line and said you were getting involved, they said, listen, you can ask for redemption, but it could be 120 days before we get it back to you. So just realize that that's the situation. And so it's great until it isn't. And then when Blackstone comes out of the blue and says, hey, we're stopping redemptions, that markets are a little bit nervous. And private equity isn't really something that a lot of us engage in. Yeah. Most of us do sit in the regular markets. And so this is hitting a group that really, it had my eyes looking at it for quite some time.
All right, let's keep moving. We're going to get into the stock action. Like always, when we like to touch at least a little bit of cryptocurrency, especially when it's pertained and could leak into different stocks. That's why we brought up Blackstone and different areas. Of course, we've been watching how kind of the cryptocurrency stocks have been trading. Just shows me more and more the uncertainty out there. Let's move forward. Let's get towards now Moderna and Merck announcing an mRNA investigational personalized mRNA cancer vaccine in combination with Keytruda met primary effectiveness endpoint of phase 2B. So let's go to there. Merck and Moderna getting some lift here. And I will say, I was talking about Moderna yesterday. I tried to get in there yesterday. I actually got stopped out in that move, man. I got stopped out.
Bought on these stocks.
Yeah, they got fast.
So fast. Drug stocks, healthcare stocks are still the place you want to be. Again, my only concern with Moderna, I've said it before, is I don't know if the gravy train from all the COVID shots is going to continue as much. So you got to be a little bit careful with the PE. But I'm not going to challenge the management of this company, which has gotten everything absolutely right. They got the vaccines out there fast. They're coming up with new stuff. I mean, now you're talking about deals with Keytruda. and working on they've worked on so many different things, from the flu vaccines to cancer drugs. I mean, the management of this company is just firing on all cylinders. The only reason that I stay out is that I'm concerned that the booster shots aren't going to be as much of a gravy trade as they were in the past. But I tell you, this is a well-run company. What are your thoughts on Moderna technically here, Anne Marie?
Technically,
or fundamentally?
Yeah. Well, I think I feel like there's a lot of charts that are really sitting in a very wide range. And so just as quickly as moving out, we get to move back in. So if we just take a look at everything, we can see we're really just ranging. And on those spaces, yeah, exactly. We're moving up at the top of the range, down at the bottom. And if we have the presence of mind to go, wait a second, did I just break out of a short-term base that I can just power up and go into the next level? Absolutely. You take it and then you're gone. I'm seeing a lot of trading just moving in and moving out, breakouts not holding, breakdowns not holding. And that to me is a tendency of the general, what I would consider a general bear market. And so that really is what I'm looking at from a technical perspective. I'm just trying to get in and see if I can find those stable events and then see where the next leadership is coming from for when we get out of this mess. I really have been scouring environments for that.
I agree with that. It's very difficult to find stocks in trend. And when they are in trend, they don't seem to last long. You can see it there on Moderna's chart. It was going up here a couple days, and then boom, we get this long period of sideways action, almost like a month of sideways action. So we got to be careful in definitely those sideways periods right now, consolidation. Bear markets aren't the best to trend trade. And I think Dennis has been trying to tell us that all year long.
It's been a contrarian market. I mean, 2022 again has been, if you've been buying dips, selling rips, shorting rips, buying dips, I mean, that is what has paid the bills here. Yeah. Everybody was giving me heat there because I was saying, coming to back, 3 days ago where the market dipped and then it dipped again. They're like, well, where are the dip buyers? Don't they merge here, in the last couple of days here, and we bring us right back up into range here again. So, I mean, it seems like we move 50, 80, 100 points in one direction. Then we come back and we just come back in the other direction. Now, again, the CPI number, you could see some follow through here because I think everybody's sitting, and waiting to see if it's hot or not. But I mean, you look here, it's been difficult market to chase in, Anne Marie, and it's been a difficult market to be a momentum trader.
100%. One of the toughest markets I've seen in a long time.
Yeah, it's not easy. I don't think it's ever easy, though. But let's keep going. Let's get into Oracle now. They released some numbers here. And also Piper Sandler maintaining neutral on Oracle, raising price target to 85. So I'll bring that up. Let's take a look at the chart. EPS at $1.21, beat the $1.18 estimate. Sales at $12.3 billion, beat the $12.04 billion estimate. Let's see what happens now in Oracle. Is this a stock to be looking for? What do you guys feel?
I'll let you take this one, Anne Marie.
Oracle's been one of those grinding. If you think Oracle's a company that's worth holding, it's something that when you see a big dip, you pick some up. And so
true.
From a big picture perspective, they sit on the floor and spine of just about every Fortune 500, Fortune 1000 company. And so they're here to stay. The problem is they're never going to be your 10 bagger. They're never going to be your 5 bagger. But what they will be is stable. Now, what I haven't looked at is what they're what are they a dividend stock?
A little one, 1.53%. So little dividend, nothing.
Right.
Great.
So not great, but
No.
there. I don't normally touch big monsters like this until I see them come down into some kind of yearly low or quarterly low, and then I'll say, you know what, this is a good place to stage something where we can have a little bit of a lift and a move forward. I like it overall, but again, We're up at levels where the only people that have come in are sellers. And so there's still a lot to be told from the storyboard.
I think your analysis is spot on. This is one
Yeah.
that if you do buy on dips, it seems like I don't know if it's just my selective perception or not, but it seems like Oracle's the stock that, misses earnings, goes down 10%, and then you look at it 2 months later and it's just come right back up again.
Exactly.
It's like the stock that you're just buying on dips and it just continues to come back and outperform. Obviously, we're still down from the highs, but when you really consider what's happened to some stocks in 2022,
Yeah.
you're only talking about stocks 25 points off the high. So a lot of other tech stocks have really been hit hard.
Yeah.
And it is a lower PE as well. So it does have that going for it, where some of these other nosebleed stocks, haven't found any support anywhere because the value investors stay away. Value investors do come into Oracle at certain prices there. I was on this stock for the better part of a decade. I am out of it now, but it's one that if it gets back down, I'd think about buying it again.
Yeah, same.
All right, we'll keep moving from Oracle. We'll go to United Airlines. Of course, this is one of the headlines that, just to kind of state, Reuters was stating this last week on this headline. Let's go to UAL and BA. Boeing's the first one we'll take a look at. United Airlines announced 200 jet order that includes 100 787 Dreamliners and 100 737 MAX jets. Of course, these will replace some of the other planes. Approximately 100 planes of the new wide-body order are expected to replace Boeing 767s and Boeing 777s. This will give an expected decrease in 2030 of 25% to carbon emissions. Not a bad move here in Boeing. What do you guys feel about Boeing and United Airlines?
Well, to your point, Mitch, you talked about this on your show, and the second thing is that we knew about this order. They talked about this on Friday, that they were going to announce a big order with UAL. It's how dumb this market is. And it's like the news comes out, and they're like, oh my goodness, it's a big order from Boeing. They told us this order was coming on the media. It was said on CNBC, said in multiple media sources. We knew this order was coming. I cannot believe that the market is this, just ignorant to ignore it. And then they actually buy it up here again. So I don't know. I would be ringing the register ahead of this 830 number because we already knew this information. Now it runs another 2% on it. But this isn't new information. They said this last week. This is probably why the stock was up on yesterday, because they knew this information was coming. And now they rally it again. So they buy it on the rumor and they buy it on the news. I think it's a chance to ring the register. Again, everything changes with CPI in 6 minutes. But if I was sitting on this nice little 10-point move in the last 2 days, I wouldn't want to hold it through a CPI report.
Absolutely. And a lot of algorithmic trading is going on right here, right? They're news algorithms, and they pop it out and they go, let's run it up the flagpole, which opens up the next algorithm group that says, all right, let's see what buying increases over the next 30 seconds. And so I do believe that there's a lot of automatic trading that these desks, the big corporations that have trading desks, we're going to see a lot of that coming in the next quarter for them making money on these algorithmic trades.
Oh, for sure. This is, the stock market is run by high frequency traders. They keep it efficient. They do have, there are your market makers. They do keep it efficient. But that's everywhere, and I think there's a lot of other things that go on the desk too. I don't know if it's like necessarily manipulative activity or not, but they will push stocks around. Don't kid yourself. There is pushing stocks around, especially, and I've always said this, I think it's the hedge funds even more than the high frequency traders. Some of the hedge funds, they get the big money and there's a report and they're wishy-washy and they don't know, the market's like, oh, is it good or is it bad? Well, those hedge funds, Joel's talked about this back in the day from the 80s too. Those hedge funds that are long this stock's like, I'll show you, it's a good report. And then they start buying it up. And for a couple thousand shares, pushing it higher, everybody's like, oh, look, it's a good report. So they can make the price discovery happen and push the price in their own direction. And that's the big hedge funds, not so much the high frequency traders doing that. But, they're all algorithmic too. Don't kid yourself. There's a lot of people pushing price around in this market.
Especially with limited liquidity like we have right now.
Yeah.
Definitely limited liquidity.
When liquidity's down, that's when they push price. It's the whole argument that I've argued for years on the S&P futures. They get pushed around between the hours of 8 p.m. and 4 a.m. One, because the stocks are closed, so you don't have that fungibility there anymore, so it gets thinner. So, and if you want to push the price higher, you're going to push it in the wee hours of the night when there's not that much liquidity out there.
Exactly.
Why do you think over the last 35 years we've seen, the returns, overnight returns, so much better than the intraday returns? Because the liquidity is so much less, and that's where you can really push price around. Anne Marie's kept bringing up some very good points here this morning. But here we are. We're 3 minutes away. Money Mitch has just been, he's gone. He's gone to trade the report. I think he left me and you here. But this is getting wild here. This is absolutely wild right now. We're looking at the chop on the S&P. We are already, 1-2 points wide here. We haven't even started. Very, 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 very choppy.
You think they're jumping the gun?
Holy mackerel. We just jumped up 1%. Now we're like barely or which dropped 0.25% here just as I'm talking.
Yeah, I'll give at least the estimates here just so we can get way ahead of it, and then we can have some conversation. Dennis will be out right towards the.
I'm actually going to take off. That's why we've got Anne Marie here. I'm
going
to take off pretty much right now because I don't want to get run over here. But I will be back as soon as I possibly can. But Anne Marie is going to be helping you guys out here, so you guys are going to be good.
No worries. We're going to go ahead and take it here. So we'll give the estimates here. Core CPI month over month. November is estimated at 0.3. Prior was 0.3. Where the numbers really kind of change is when we're looking at the year over year number, right? So prior was 7.7. The estimate this time is 7.3. What do we want to see? What do we don't want to see? What's going to be hot? What would be considered more light here, right? So, of course, what we don't want to see is a number closer towards that 7.7, right? Last time we went from 8.1 to that 7.7. So definitely anything towards 7.7 would not be a good outlook for, of course, the bulls. That'd be probably downside action. Now, if we come in, let's say maybe 7.1 or even into the 6 handle, that I think would be definitely good for the markets. And we could see that upside breakout. Of course, we need to continue watch to see when the report comes out and not overreacting. There's one thing that I have seen in these CPI reports as of late is that the algos pick it up really quickly. But remember, good news, bad news, good news. I think that this is when the algos struggle a little bit to understand what really is the number and is it good or bad for us. So let's also take into that account as we get the spread out and we get the numbers to hit. It could be a quick up reaction followed by that sweeping down reaction. So just want to put that out there. You guys make your own investment decisions. I know I don't trade around these numbers. I usually like to just be neutral. And if I do got positions, I usually make sure that I'm paying attention to like swing trades and things like that. But it's hard when you run into numbers like this because like always, the market can start driving all the stocks, right? And so it's hard to take a trade, especially a swing trade on a day like today where you're getting some CPI numbers in the morning, and it could shake up any type of bullish pattern or bearish pattern for that sense and could turn things back around. What are you expecting here, Ann? And you don't have to give hot or light, but what is situational thinking for you here for hot or cold?
Well, I don't normally think about whether the number's hot or cold. I am concerned about based on positioning. Whoa, that just popped out.
We're just getting a little pop here towards 414. It looks like it's light, of course. I'll wait to actually have the exact number here.
Holy smokes. Dollar just fell off a cliff.
That's a good sign when the dollar's falling off the cliff, right?
TLT's on the rise.
All right, I have rose month over month 0.1, year over year 7.1. So that's not looking too bad. That's the last 12 months. At least 7.1 lower than the estimate, right? 7.1. We didn't get into the 6 handle, but we're getting inflation coming down there. The month over month reading was 0.1. So that's lower than the estimate there. Now I'm looking for core CPI numbers. I want to see what's going on in our core CPI. Estimate was 0.3. Let's go and take a look here. And then, of course, I'll actually pull up the report. I always like actually pulling up the report because that's going to help us see what is actually changing in inflation, right? Where did we get some downturn? I'm looking through the report right now just to take a quick outlook here. One thing I can see is gas pipe service coming down. Of course, remember back in September, we had a spike there, and that was the concern with natural gas, and electricity was going up. Now we got a negative downturn there in electricity. That's a good outlook there. Fuel did get a little bit of a push up, but nowhere near as last month's. We got 1.7 there, seasonally changed from October's 19.8. So that's not too bad there. Doesn't look as bad as we expect. And then, of course, what is the biggest and most kind of component in the CPI is going to be looking into the shelter, right? And the rent. How is that looking? Well, we actually went down. We didn't get into the negatives, but we went from 0.8 to 0.6 in shelter. That's not the worst outlook there. We're getting the SPY to push here towards 414, high on the 1 minute right now at 414.14. Let's work these core numbers in here. Year over year for core is at 6% versus 6.1% estimate. So lower there. Seems like all numbers coming in lower. Month over month for core was at 0.2 versus 0.3. All numbers pointing in the right direction for the bulls here. And what does this tell us? Well, this puts, from my perspective, 50 basis points tomorrow. At least that's what I would be thinking here is 50 basis points. Now I really think 75 is off the table as they're starting to see inflation heading in the direction. And if anything, I expect to see Jerome Powell giving himself a good pat on the back tomorrow in the conference. As, yeah, some could say it's not that the Fed has caused this to come down. It could be, oil prices coming down. That's definitely helping out. But inflation showing signs of weakening here. And I mean, that overall, I think that's good for everybody, right? I don't think we all want inflation higher. We've all had a good, 2 years now of inflation period. So it's very difficult to continue this, but it looks like the Fed's initiative of trying to get inflation down is heading in the right direction. What do you think here, Anne-Marie? What's your first reactions?
I think the market is overreacting to just about everything.
Yeah.
And Nick Timrose, who is the Wall Street Journal reporter that has sort of the inside track, he's got the red bat phone to the Powell group. Mm-hmm. And they did come out and say, hey, listen, we're going to only do 50 basis points. And so that's sort of baked in by these numbers for sure. The question is, do we have, what are we actually bouncing off of? Is it based on what's happening with the job market and all of those different things? Is it good that we're still raising? And the fact that we're bouncing, and as you mentioned a little bit before, we're really close to, we talked about these levels, we're really close to some old highs. Mm-hmm. And we've run right up the chain with interest rates. So the question might be, well, sure, we're bouncing, but are we really, should we be really cheering another 50 basis point rise from an interest rate perspective? So I don't want to get really macro because that's not so much our game here. Mm-hmm. But the question to me is, I love this channel that you've got right here.
Yeah.
The question to me is, what's likely in the current environment? We talked earlier about you getting your CMT certifications and talking about being adaptive in these formations. And here we are bouncing right into a channel and immediately coming off of those prior highs, right? I mean, the second we hit it, nothing but sellers waiting there on that first bar. And then now we've got the second bar dipping back into the channel. My thought is we pull back a little bit and then we try to grind up. It's very obvious that we're making higher lows, mm-hmm. but don't expect in this environment for bounce action to hold and completely write up. And that's the problem that I think a lot of us that are newer traders, we get very much caught up in the tight time frames and the tight candlesticks and saying, hey, I don't want to miss out. And in the end, what we have to do is say, okay, I don't want to miss out. That's an adventure, but at what risk, right? Like if you love skydiving and somebody goes, hey, the plane's going up now, and you go, I haven't had a lesson. I don't know anything about this pack. I haven't learned how to fold my my chute. I'm gonna go. I'll just borrow this chute from Joe anybody, and you hop in there, things could end badly. I mean, it could be hair, teeth, and eyeballs. And so really the big thing to think about is, okay, if we're spiking up, what should hold and then what should fade? And when we're looking at something like this and immediately right off the number, we start seeing these red candlesticks just pulling back in. The question then becomes, okay, where did everybody say, okay, this is a good price? And it might be that cluster in the early part of the morning / day where we see all the price action holding down at that base, right? Just don't rush in because you're afraid. The great thing about this market is if you like to second guess yourself and you understand market flow, support and resistance, the market gives you time to get in.
A lot of the times we get those throwback looks, right, where we get through resistance and then it comes right back to that level.
Yes.
And so a lot of times you want to be looking for those opportunities if you're more of a patient trader, looking for the move and looking for those opportunities on the pullbacks. A lot of times we do get that second opportunity to get in either very near that break spot or just slightly above it. And so I always think that's always a good outlook there. And understanding that maybe like some traders, they take half position sizing on those breaks. And then they look for the throwbacks to really hold. And then they're like, well, there you go. Now I'm getting more confirmation. We went through that little pullback and now we're continuing the momentum in the right direction, which is what we're looking for. SPY definitely gave that little spike. I think an important level to look for is going to be definitely the 410 level here from Thursday's December 1st. That hit right on the kisser, 410 there. So let's take a look to see if we can get above that level. You can see we got above that on the first initial reaction. A lot of the times that could be an overreaction. Now we'll look to see how the pricing arbitrage really kind of takes place here. There's usually that first spike, right? That's like just the momentum. And then, of course, everyone tries to kind of play in here and try to call the price that they feel is the better price, the arbitrage price here. Let's see if it can get back above the 410. That's definitely something to watch. Let's take a look at some of the sectors out there because I wanted to take a look like maybe XLF, see how this is reacting because I did see some financials pulling back as of recent. And then I wanted to see if they were going to be able to catch bid again. Stocks like Goldman Sachs had pulled back, right? You guys can see this. I'll pull up the daily chart here so you guys can see that pullback. I was looking to see if we were going to hold into this gap. We actually went back. We filled it in there. Now we're starting to curve back on this chart. So this is kind of one of those that I'll keep in mind. Of course, if we're going to get into a recession, some people probably will get concerned about the banks, but they have been strong. I mean, we did get this nice big run up. Now we just need to see if it's going to continue a push into today. I'll be watching some banks. I know JPM, very similar. This one at least didn't come down as much as Goldman Sachs, so you can see a little bit more relative strength here. And JP Morgan, we'll see if we can get this back through maybe 137. Let's go towards the 15 minutes so you guys can see that just spiked there through 136. Kind of a little push here towards 137 is what I'll be looking for today. How do you feel about banks overall?
Well, my opinion of banks is that they're going to be a little mixed. I know the storyboard is normally, hey, when interest rates rise, banks have more opportunity to make money. And that is usually correct, except for the fact that the FOMC is not allowing banks to carry as much treasuries on their balance sheet, which they can use as cash. So they're really not able to loan as much as they would normally want to loan because that number is getting smaller. So there's a little bit of a mishmash. The banks that have trading desks and are able to participate in the market on a different event are probably going to do better. And JP Morgan has really had the inside track. They've really sort of become the darling of the street. And in my mind, they've stepped over Goldman from that perspective. I think Jamie Dimon has done a good job of talking his book in the right way to bring people that sense of confidence. And really that's why these prices go up, is because people are confident that it's going to do more. But again, we're sitting at a region where in the past sellers have come in. And so what we have to do is be very careful and say, really, is this an actual reason that we can buy and maybe hold on for a longer cycle? My thought is not quite yet. I don't love the financials right now at the end of the day.
Let's take a look at some others that should be maybe getting a little bit of a lift with the dollar coming down fast, right? That can definitely affect certain stocks. We'll take a look. Maybe it's a silver trade. I know silver has been performing pretty well against gold. In this environment, and we're seeing it already. This is the daily setup, right? It looks to me like we have a little bit of a daily flag here.
Yeah, breakout, you guys can see very that.
Nice little breakout, trying to come back towards the highs. Of course, we can take a look at the highs candle there. 1750s is kind of the area that it could be getting to. Let's go towards the 15-minute. You guys can see that starting to push out of that kind of channel. Now trying to get towards the new highs here. 715 acting as a little bit of resistance right now. We'll see if this can continue to push. Stocks like this, I'll definitely keep on my radar today. There's other silver stocks, right? I'll run you through really quickly their daily charts so you guys can take a look at and see how they're all kind of setting up. Look at this AG.
Yeah.
Trying to get towards 950. MAG doesn't look like the best. There's some here that are cheap. You know, silver names aren't the most expensive names. And of course, you could also just look at SLV, right? If you wanted to be kind of more in an ETF, Silver Trust here. The iShare one looking like it wants to get towards 22.
Hot. Yep. That's been running. All the basic materials I love. I love basic materials right now. I think basic materials, healthcare, some very good biotechs. You know, my thought has been, if you're looking for, all right, I like to trade a little bit, but I would love to find something that will run a bit. I would say, look at where government is going to put its money. It's going to put its money in healthcare. And so those guys are going to keep going. It's going to put their money in supporting healthcare plans. They're going to put their money in defense. They're going to put their money in basic materials are going to get driven by all of those things. And so that's really, I love the basic materials sector. I'm really looking for strength in those spaces, and then staying on top of the healthcare thing. A lot of companies have been doing really well because they've been working on different things like diabetes and Alzheimer's, and we are an aging economy, and you know, those are going to be the things that are going to hold after they continue, after we settle out, they're going to continue to rise.
Yeah, definitely. There's some gold moving up. Definitely take a look maybe at GLD. This one looks like a nice setup also on the daily, starting to get through that December 1st high. That's 1734. We're at 1731 right now on that GLD. We'll see if that can continue pushing. Catching up with the chat, I said looks like they're calling out 410. Close there on the SPY. We're getting really close. You see how we kind of put a little bit of a high here. It went to 410.27. Let's see if we can start closing above 410 on the 1 minutes and not just rejecting off of it like we kind of just did right now. We'll see if this candle can close above that 410. That's why I always look for those close, man. Those I have a little saying that I've been living by. Tricks, wicks are tricks. Wicks are tricks because, man,
Love it.
those wicks, they get you. They'll get
They
you a lot.
They do.
Yeah. And especially when you're really tight on your risk and reward, that's when I've seen it the most, right? When you just get
Yep.
stopped out, boom, and then the trade goes in your direction. That's the hard part of trading and understanding how to deal with the volatility, especially in this market. Now, one area that we have been looking at is like a coal trade. So we'll look to see if this can get hot again. Peabody's been the one that I've been kind of
Good
just
company.
slowly following. I like when it trends. When it trends, it has a tendency of giving us, maybe 2-3 days in direction. And so that's a good outlook too there. It's a tough kind of intraday trader. It does have a tendency to drop back a lot of the times to hourly supports, but we're going to look to see if this can catch now a daily support around the 27.24 area. Yesterday, 27.09, right around that level. I'll look to see if it can bounce back into the 30. 30 is such an important price point for BTU to start getting above. You can see it here on the right-hand side too, from like the monthlies. Can we hold this pullback, right? Can we make a nice little inside move, then get back towards that big candle that we had in November? High there was 32.89. All right, we'll take a look at some other areas to take a watch. Industrials have been an area that I've seen slowly get up there. Yesterday, it pulled back a little bit. Towards the close, it started pushing, of course, with that nice run. This is an area that I feel a lot of traders are just missing out on opportunities. How do you feel about industrials?
I love the industrials. I mean, at the end of the day, if we are going to move, we have a little bit of a disconnect, right? We want to move to alternative energies, but right now, industrial machinery is the only way that's going to help us get those metals and elements out of the ground, and they use a lot of diesel fuel. And so by nature, I believe these guys are just going to start to continue to grind to the north. Again, because I believe intrinsically we're in a bearish environment, let's just wait for these dips where they come back into monthly levels that we really like and say, you know what, I'm going to nibble. This is not the environment where you can go, I'm going to go out and make a ton of money in a short period of time, unless you are opening yourself to an unbelievable amount of risk. And for somebody like me that's been around for a couple of decades, it's really important to manage that risk because it'll keep you around a lot longer.
Nope. And I think this is an important kind of area to watch because a lot of these have those low PEs, right? And these are companies that have cash flow. I don't think we're seeing, deer or cat disappear anytime soon.
No.
And so when we're looking at environments like this, we also got to be thinking about companies like this that we ain't going to be the most sexy name. And I'll say it like that. But at the same time, seems like they've been doing really well. Especially in the last kind of 2 or 3 months. Deere I feel, has gone way too far even. But like a Caterpillar has just been playing catch up, right? Well, that's been doing pretty well. Paccar is another name that lagged even further behind on that move and has made a nice monthly move. I mean, when you think about it, it's a pretty good looking monthly candle. Two monthly bars, strong bars to the upside, and capturing all that wick action that you had over here where prices couldn't hold in the 90s.
Like
now you're really holding it. And if anything, you held that 100 pullback. Low right now in the month is 99.95, holding pretty well. We'll see what happens on names in the industrial area, especially farm and heavy construction. But we've seen also the defense area, right? Aerospace defense continue to do well, like LMT. I think this is even setting up for another move, maybe for 500. Nice little inside candle style, little wick here on the monthlies. Let's see if we can get back into the 500. We did have a high on the second of 498.95 at Lockheed Martin.
Peek at Halliburton for me.
Yeah, let's take a look at a little bit of the oil game. Let's say this has been one that, especially when Schlumberger broke out, that's when Halliburton really started making a move. What do you see on this chart now?
Well, here's the interesting thing. Halliburton is actually going to be able to benefit from defense contracts as well as Schlumberger for sure.
Yeah.
It's not a real strong part of their core, but I believe that Halliburton is going to be something to watch, and I love the fact that it's had a pullback. I'd love for it to pull back into the, I don't know, maybe the 31-ish area, down with the last higher low, lower high, way back. It went behind you. Yeah, right around there, that break area, and it's come into the zone. My suspicion is it might chop around there, but I do like it from that perspective because money is going to get thrown into the defense space. I don't know if you've seen how much money has been moved to defense, particularly as we help Ukraine. Those things, I mean, that's going to show up in their bottom line. It absolutely is. And it's not going to matter their earnings per share in terms of, well, here are all our contracts. I mean, the government's going to pay whatever to get this stuff going. So I like that space. Unfortunately, I know I always end up sounding like the wet blanket in the group, but I do see a trudging towards a building of defense and more things around the defense sectors as time marches on.
Definitely. I don't think it's going away anytime soon. And we've been seeing these companies continue their strength. We'll see if they can continue making moves. Even like a Honeywell has been doing really well. GE that no one talks about anymore. No one even brings it up. But look at how that move was. That was a really nice move.
Huge. Yeah, absolutely.
Really nice move.
We're watching bottom pickers come into the market.
Yeah.
We really are, so if we have, let's say we've got 8 more months left in this bearish environment, you can see a lot of stocks basing, just coming off the bottom and come back down and holding the floor. A great search might be, hey, give me stocks that have more than a million shares and are above their 20-day low. And you're going to end up seeing a ton of these, and you just look for it on the monthly area that goes, all right, are they holding the floor? And you can see institutional buying that way.
Definitely. And the monthly candle is such an advantage when you're using stocks like this, where it's not the growth name, right? If it was a growth name, then I wouldn't maybe even look at that monthly chart because it's going to have that really high volatility. The beta will be too high for it to kind of hold those trends. But a name like these that are in the industrials, they have a little bit lower beta. So they kind of tend to stick to the trends in this environment. So good names to definitely keep watch. We'll see what happens with these stocks. Let's keep moving. We'll take another little peek into the S&P 500 or the SPY here for me. Looks like we rejected a little bit off of those 410 marks. We talked about, could we get back to 410? Now we're just hanging out at the 409.60s. Be careful, team. It seems like that's acting as resistance right now. Of course, resistance could be resistance until it's broken. But for right now, we got to keep watch. And if you look on the right-hand side of this chart, near the SPY, we're really near those monthly levels too. I know Joel would want me to point to some of these, like September's high, 411.73. Areas like that seem to be holding up right now, 410, 411s. And guess who we have back? None other than my man, Dennis Dick. What's going on?
They just bought the hell out of it. We knew if it came in light, they were going to buy the hell out of it. And we talked about the 410 to 420. Stalling at the 410, right where you'd think they'd stall. So, Mitch, I was listening to your technical analysis. Spot on, those two highs. I go right back to September. I was thinking the same thing, 411.73. How high did we get to pre-market? Did we touch up to 411?
414.
That just got silly. So that's algo silliness. Getting just
and kept us in check a little bit. She said that we could get that overreaction. It looks like we got a little bit overreaction.
Yeah. Like the 420 is like the Rock of Gibraltar up there. It's where I said I'm going to sell all my stocks.
Yeah.
So, I have a lot of cash in my portfolio. People are going to be asking, what are you buying today? Absolutely nothing.
Yeah, that's what a lot of people kind of. That's the
Yeah.
mentality. So explain that, Dennis. Why?
I was buying at
Why wouldn't you be
8:30,
like
like
that?
trying in this day trade, just trying to lift whatever the hell I could. I bought home builders. I'm trying to buy whatever I can that's interest rate sensitive and go right to the interest rate stuff. Those are day trades, though. I'll take those trades off today. So I'm not putting them on now. They moved up 4 or 5%. So you're just trying to lift offers, right on that number. That's the day trading side. From the investing side here, I think there's room to 420. I do. I've said that before. You set up seasonality. Now you got a light number. There's room there. I think at 420, I think you're getting rid of everything. Like, I think you're just, because then you're getting to a point where, are we going back to all-time highs? I don't see it anytime in the near future. I do think we're still going to go into a recession. This doesn't change my thinking that, it's going to be a tougher 2023 for companies. But with that being said, great number. I think the bulls got some control here, and there is room to 420.
Yeah, the pain trade is definitely north for intraday traders and futures traders.
Yeah. And that's been the case. I mean, you get these dips, but people, and myself and Mitch included, I mean, we're still sticking, and I'm still sticking with the overall bearish theme overall.
Yeah.
But as a trader, I've been saying, you just got to go with what's working. And a short-term trader here, the dips bought again ahead of this number. Maybe somebody knew something. Maybe they didn't. Maybe it's shorts covering. Who knows? But wow, they're getting paid here today. With that being said, we are right at that key resistance point of 410 where we were up to a week ago. So can we breach that? Can we get up through that? Can we make the run for 420? Does this have enough, is there enough information here to push the market higher? Or does Fed come out and try to cool the market with the Fed speak? Because there'll be some Fed speak after this. And, the Fed doesn't want a rip-roaring stock market rally here. That's going counter to what they're trying to do. Not that they're trying to knock the stocks down, but they don't want the wealth effect all of a sudden fighting, what they're trying to accomplish by bringing in prices. So I do think that the Fed will try to cool the market a little bit with Fed speak coming up too. That's why if you're selling stocks up here at 410, I won't argue with you. I do think there's room to 420 for the short-term traders. So if I'm long, maybe I'm like holding, for a little bit more here yet, but burn the hand, and this market has really paid.
Well, I think that's a great perspective. Now it's time to watch to see what happens towards the intraday. Of course, like we talked about, I think you're in our camp too, Dennis. This puts no 75 on the table tomorrow, more guaranteed the 50 basis points. So it's kind of the
75's gone.
Yeah, that went out
history.
The window.
So you're 50. Then what does he say? Does he say, well, we're still a little bit concerned, wage inflation? I haven't been able to, it's obviously it was trading, so I haven't dug into the details of this report here yet. So, obviously maybe sometimes the devil's in the details. But what I will say is, the bots just care about the headline number anyways. They see 7.1 versus 7.3, and it's just green light go.
Well, I have to do for the chat, and always, I did want to throw out a special thank you for Anne-Marie Baiynd joining us the whole show. Can you guys give some love out there? Look at the chat. I told them to throw up ones or and for some love, and you can see the ones rolling through there. Plenty of people definitely thanking you, Anne, for joining us
much,
today.
Everyone.
That's what it's all about. Definitely here. We've built an amazing community here at PreMarket Prep. Definitely supporting traders to keep pushing forward and helping us, giving her perspective. And that's what it's all about. Transparency, whether you guys, agree or disagree, that's what it's all about. There's two sides to every coin. And we all need to know what's on both sides.
Thanks, Anne-Marie. You did a great job here.
My
Obviously,
pleasure.
we always know you have fantastic content. Thanks.
You flatter me, but I take it. I'll take it.
Thanks for covering, me and Joel. We knew we were going to need some help there because I knew I was probably going to go trade the number. So yeah, appreciate it as well. Final thoughts, Anne-Marie, before we let you go?
You know what? Stay frosty. And if you're in and you see the market turn in another direction, don't be afraid to go, hey, I'm out of here.
Yeah.
Capital preservation is very important in this kind of environment.
Yeah. And I mean, we're getting a lot of that capital back here. There's, some stocks that are now approaching all-time highs. There will be some stocks making new all-time highs here today. I can look at Deere approaching all-time highs. I'm very, very, very nervous to be buying stocks at all-time highs here. I know the momentum traders love, when we're going up and, making new highs, but I just think like, man, with the way interest rates have come up, I've got to think eventually it's going to be less money for, and maybe that's what's showing up, and that's why the price demand. So that's not good for the corporate earnings coming in, January. But we're a month away from that. Good times roll. I think there's room to 420.
Yeah, absolutely. We'll just have to see how it feels when we get our property tax bills in the mail.
Oh gosh,
with all of this.
Can you imagine? Like that's reevaluating that. That's a scary thought.
I'm not looking forward to it.
No, me
And
neither.
before we let Ann go, where can they keep following, learning more from you? I know that you're doing great stuff here at Benzinga also. So I want to give you also a second to maybe give a little bit of a shout out there. You guys can also be keeping up with her trading outlooks. She even has a chat on Benzinga Pro. I said that, her own chat. Check it out, team. It's always fun to stay in tune with Anne-Marie Baiynd. So I'll give you the floor. Anything you want to say, Ann?
You know what? Come see me on the Benzinga Pro platform. I'm there for everyone to look at and exchange thoughts and ideas and show you where trades are in the flow for me in the next few days. And you can also find me on StockTwits and Twitter and ask me questions at thetradingbook.com.
Love it.
Thanks,
Thank you for
gents.
joining us. Have a good one. We'll have you
Thanks,
back.
Anne-Marie.
Thank you. Good luck.
Awesome. Actually,
I'll stay with you for 2 more minutes here. Then obviously I got to continue on here. People are asking, what do you do at 8:30 when you leave? Like, what are you doing? I'm just lifting offers. So I'm just literally going in there as a day trader. I'm just buying anything I'm short. I'm trying to cover as quickly as I can. You got like, you got literally 15 to 30 seconds where the stocks might lag a little bit, where you're going to get an opportunity. Like I said, I bought some Lennar.
I got you.
And I had a little bit going in, but I bought a little bit more. This is not a swing trade, not an investment. That was a short-term day trade. I will sell this today. So I'm not saying you should be buying it up when it's up 4% now.
Yeah.
But when it's up 1%, you get a number like that, or 1.5%. Those are the kind of stocks you want to buy. I was just, going through. If I go through my trades, right at 8:30, I'm just trying to lift offers. So just as quickly as I possibly can. It's just going in there on anything. I bought like Johnson & Johnson. Wasn't saying that that's the one, but it was flat. So I'm like, I'm just buying anything at that time.
So finding some lagging.
Scotia,
you're looking for lagging action. Is that
exactly
what you're looking for, Dennis?
Exactly. You're just looking for whatever you can lift there in that time period, and then you're turning around and trying to sell. Some of the stuff too. So
yeah,
I mean, you're just flipping. That's just scalping, short-term scalping. The algos obviously take the majority of it, so I'm basically just fighting for scraps there as the human beings that we are. The algos lift the majority of it, but they're not quick on everything, so there is some opportunities still there on these numbers. And then I'm just flipping around. I'm selling some stuff, buying some stuff, selling some stuff, buying some stuff. It's just, I made quite a few trades in that 20-minute period there. So, and that just continues. But that's just, short-term scalping. That's not position trading. That's not like, I think, I'm buying this for the next 10 minutes. But, or the next 10 days. I'm buying it for the next 10 minutes. But, there's certain sectors that are going to do better than others. Like home builders are going to do well because they're so interest rate sensitive. So, when you see that number light, that's where you want to focus to is kind of those stocks. Like I know on the last report when they were up, some of the home builders are up at the end of the day 7, 8, 10%. Some of them are only up 3% right now. Like if I could buy a home builder up 3%, the market's only up 3%. I think that's a pretty decent trade right now because I think the home builder should outperform the market because they're so interest rate sensitive. See the relative valuation call that I'm making there. So, so you're just trying to trade as quickly as you possibly can.
Definitely, and that's what it's all about. I hope that you guys enjoyed all today's action and our show. Definitely give thanks to Anne-Marie and give her a follow. I threw it up in the chat. I threw her Twitter up. I'll throw it up one more time. We want to see her get some follows for all the action that she stuck around with today. So definitely give her some love and give that follow. Dennis, you have a good one, my friend. Go do what you do best. Get to your trading action. And like always, you guys can keep up with Dennis at Triple D Trader. Give him a follow also. And we'll keep moving here on Benzinga. We got a great show for you. Up next, you guys got Benzinga TV, live trading action. Lord Ryan and I will get you into the market. I'm ready to go ahead and get my trading shoes on. Let's see what we got today. Already gotten some fireworks with the CPI report. We did touch on a couple of headlines, missed out on a couple, so I want to keep rolling through. I want to give you those really quickly. There was some headlines out there that First Solar being included in the S&P 500. Keep your eyes on that. See how that kind of moves today. NFE announcing later in Monday after hours, they announced a special dividend policy to return a dividend of $3 per share with a record date of January 4th, payment date of January 13th. Keep your eyes on that. EVgo and Lyft launching new partnerships to accelerate rideshare electrification nationwide. And JetBlue putting out some pre-announcement numbers that their ASM at the low end of 15 to 19%, the guidance range, slightly was coming down in the pre-market, but pushed, of course, with the market. CPI is going to change all these kind of headlines, but just wanted to make sure that we touched them. Hit the thumbs up. Like always, we'll be here for you, pre-market prep, and I'll see you guys next time. Let's keep moving on. Let's get to some live trading action, and of course, hit the like on your way out.